Question 9 was by far the biggest question on the exam, and it focused on journals and ledgers, disposal of non-current assets, and predominantly budgeting. So what you were asked to do for A was reconstruct the following general ledger accounts. First one was debtors control, and then you had to do stock control, and then finally you had to do disposal of equipment. So what you were given was a balance sheet, and you can see you've got the actual results there for the 30th of June, and then you've also been given what's expected to happen in a month's time as budget. You're also given the budgeted income statement for July, as well as some additional information. So starting with the debtors control ledger, the best way to do this is to remember everything that could make debtors control go up and everything that could make debtors control go down. So what we're trying to figure out is how much cash is received from debtors. So we won't find that in the question, we're going to have to find that ourselves. So looking at what makes debtors go up, the only things that will make it go up is when we make a credit sale and also when we charge GST to debtors. On the other side, receipts from debtors will decrease debtors control, giving a discount expense, a bad debt, and a sales return. Now, receipts from debtors will actually be X, and by that we mean we don't know what it will be. We'll have to find it ourselves. It just won't be in the question. However, we should be able to look for the other items. They may be there, they may not, but we can look, and that's going to save us time. If we're just looking for specific things, we can just identify what we need much quicker. So the first thing we're going to look for is sales. So we want credit sales. It just says sales of 202,000. We don't know whether they're all cash or credit. Down here though, under the additional info, it says all sales are made on credit. So we've got our first number. Credit sales will be 202,000. That must mean GST will be 10%. And now we can move on to the other side. So we don't know what receipts from debtors will be, but we are told the discount expense is 1,500. Are there any bad debts? There are. It says bad debts will be 2,200. And lastly, we've got a sales return of 1,500. However, we'll need to add GST to that, because a debtor not only gets refunded for the sale, they get refunded for the GST. So that'll be 1,650. Now that we've got that, we can recreate our debtors control ledger. We were given the opening balance. We just figured out credit sales and GST. Before that, we might want to put in bank over here as our X, because we're going to need to solve for that one. The receipts from debtors, we just don't know. On the other side, we've got credit sales and GST, which I've put on the one line. You can split those over two if you wish. On the other side, we had a discount expense, bad debts, and the sales return / GST. So what I'm missing now is, to finish this, is the balance at the end of the period. What is debtors control expected to be? So to get that, I'm going to go to the balance sheet and I'm going to look under debtors control in the budgeted result for the 31st of July. So debtors are expected to be 40,000, so I can put that number in there. I know that'll carry down on the 1st of August. And what I can do now is solve for X by adding up one side or the other. So I can either add up this side, the debits, or I can add up the credits. Now obviously that's impossible to add up the credits because we have X on that side. So what I'll do is add up the debits and put that there. Put the credit on so the same number on the credit side. And what I'll do now is subtract away the other numbers, and that will give me the total of X. And if I do that, I'll get $209,550 of cash being received from debtors. The next one is the stock control ledger. And what we're going to need to figure out is how much cash is going to be paid for stock. So we need to again remember what makes stock go up and what makes it go down. So stock goes up when we buy it from suppliers. There's a stock gain. The owner gives stock to the business as capital, or there's a sales return. On the other side, it goes down when we sell it, when there's a stock loss, when the owner takes it out for drawings, when it's donated, when there's a purchase return, or when there's a stock not write down to net realizable value. So there's obviously quite a lot to remember for stock control, and that's why it's very important to remember what goes in, because it's going to save you time just to look for specific things. First thing we want to identify is that we aren't going to know how much stock is bought from suppliers, because that is what they're asking us to find. So that will be X. What we can do though is go and look for the other items in the information we were given. Is there a stock gain anywhere in that information? There isn't, so we'll move on. Does the owner contribute stock? Well, what it says under the additional info is there will be no capital contributions. So we'll leave that one. Will there be any sales returns? There will. We're told sales returns of 1,500. The problem is though, it's not going to be that much stock. That's the sale price. We need to know the cost price. So to get the cost price, we're told the cost of sales will be 50% of sales. So that must mean the sales return is 750. On the other side, how much stock is sold to customers? We're told the cost of sales is 100,250. Just with that though, that would actually already include the sales return of 750. So technically that number should actually already have that 750 taken out of it. So I'm going to add it back in. I'll explain whether you want to do that or not. It actually doesn't matter when we look at the actual solution. Is there a stock loss? There's no mention of one, so we'll skip that one. Are there any drawings? It says here, drawings will be made by the owner, including $3,000 of stock. Are we going to donate any stock for advertising? It doesn't mention it. There is advertising, but it doesn't say whether any of it was stock. Is there a purchase return? There is not. And lastly, is there a stock write-down? There is, of $2,000. So now I have all my numbers. I'm going to recreate stock control. So the first thing we've got to remember is that the stock purchase from suppliers, I just won't know it. All stock is bought on cash, so therefore I know the full amount is going to be the X figure. Cost of sales for the sales return was 750. On this side here, the cost of sales of 101,000. Drawings of 3,000, stock write-down of 2, and what I need to finish this is the expected balance at the end of the budgeted period. And I'm going to go and get that from the debtors control, the stock control figure in the balance sheet, which is 90,000. So I'll put that in there, carry it down. I'm going to add up, in this case, the credit side. I can't add up these numbers here because one of them's X. So what I will do is add up these numbers on the credit side, put the total there, transfer it to the other side, and then subtract away the other numbers on the debit side, and that'll get stock bought on for cash of 123,250. The last one we're asked to do was the disposal of equipment account, and I'm being asked to determine the amount of cash received from the sale. So what I've been given is a bit of info. First of all, I'm told there's a profit on disposal. I've been told equipment costing 25,000 will be sold for cash, and it will have a carrying value of 9,800. So what I need to do to complete this one is remember the procedure that we follow whenever we sell a non-current asset. So step 1 is transfer the historical cost to disposal of asset. Step 2, transfer accumulated depreciation to disposal of asset. Step 3, record any proceeds of the sale. And step 4, record whether there's been a profit or a loss. So let's go through those one at a time. Let's record the historical cost of the asset that's been disposed of, and we're going to send that to the disposal of equipment account. What does that mean? It means that the equipment that we're selling, it says here, cost 25,000. So I know there's an equipment ledger with 25,000 in it, and I'm going to sell that. So what's going to happen is that's going to decrease on the credit side, so I don't have that anymore. And what I do, step 1 says I transfer that to the disposal of equipment account. Step 2 is transfer the accumulated depreciation to the disposal of asset account, but I've not been told what accumulated depreciation is. However, what I can do is figure it out. If that asset costs 25, I'm also told here that the carrying value is 9,800. Well, that must mean I've depreciated a total of 15,200. So over here in accumulated depreciation, there will be an amount as a credit of 15,200. Step 2 says what I'm going to do is get rid of that, shut it down, and I'm going to send it to the disposal of equipment account. Step 3, record the proceeds of the sale in the disposal of asset account. So what I'm going to get is some money, which will be a debit in the bank, and that's going to go as a credit in disposal of equipment. But what I don't know is how much that money is. It's not given to me. What it's actually asking me in the question is, can I find that amount? It says, can you determine the cash to be received from the sale? So I'm going to leave that as X and move on to step 4. Figure out, is there a profit or a loss? And I was told there's a profit of 3,700. So whenever we have a profit, that'd be a revenue. So it would have created a ledger called profit on disposal of equipment. That would have been a credit, and the debit would have gone here to disposal of equipment. How do I finish this? Well, what I know is that at the end of the day, this disposal of equipment account doesn't exist anymore. It balances out to 0. So I'm going to add up the bigger side, which is the debits. I'm going to put that on the credit side. I'm going to subtract away the 15,200, and that will give me a bank figure of 13,500. Looking at the marks for this question, it was marked in a very unusual way. If you got, for debtors control, the amount that was received from debtors, you automatically got 3 out of 3. Now, if you didn't get that right, there was 1 mark for the sales/GST for the actual credit sales, 1 mark for the sales return, and 1 mark for the discount expense, the bad debts, and the balancing into next period. Looking at the stock control ledger, if you got the amount of stock bought with cash, that was automatically 3 marks. So a bit like the debtors ledger, if you got the number they were asking for correct, you got all the marks. If you got it wrong, the individual marks were for the 2 cost of sales entries. And just on that, we noted that the cost of sales figure given was $100,250. You might actually just like to use that number because that number already had this $750 deducted from it. So technically, if you just leave this entry of the debit of $750 and just put in a credit of $100,250, that'll be fine. It's going to work out the same. The second mark was for drawings, and the third mark was for the stock write-down and the balancing in the next period. Looking at the disposal of equipment, there was 2 marks straight up if you got the bank figure right, and if you didn't, there was 1 mark for the cost of the equipment and the accumulated depreciation, and 1 mark for the profit on disposal. Looking at the results, 21%, so 1 in 5 couldn't get 1, which is disappointing given that there's 8 marks on this question. The top bottom half of the state in terms of who got below 50% was a lot of students. At the top end, we can see 12% of kids got 8 out of 8, which is quite impressive considering this is such a long and difficult question. Looking at the examiner's comments, students will keep in mind that reconstructing ledgers for a budget, they're not actually formal ledgers, so the strict rules of ledger accounts don't need to be followed. So what does that mean? It means dates we're not that particular with, and also your references. So for example, if you just wrote GST instead of GST clearing, that's actually not going to lose you a mark for a budgeted ledger. However, your amounts do need to be correct when you're doing a budgeted ledger.